Greetings, wealth builders! Welcome to the House Lux Estate channel, your one-stop resource for all things wealth creation. Here, we shine a light on the path to financial freedom, offering you the tools, tips, and strategies you need to build a prosperous future. We explore the latest trends, break down complex concepts, and guide you through the landscape of wealth building. Today, we dive into the top strategies for building passive income streams, so stay tuned! Before we delve into the strategies, it's crucial to understand what passive income really is. Picture a stream of revenue that keeps flowing into your bank account even while you're sleeping, vacationing, or just lounging on your couch. That's passive income. It's money you earn with little to no daily effort, a stark contrast to active income, which requires you to trade hours for dollars. Passive income is more than just an extra paycheck. It's a pathway to financial freedom. It allows you to diversify your revenue sources, lessen financial stress, and ultimately, buy more of your time back. It's about creating systems or investments that continue to generate earnings consistently. It's important to note that establishing these income streams may require an upfront investment of time, money, or both. But once set up and running efficiently, they can provide income for years or even decades. Now that we know what passive income is, let's explore the best strategies to build it. The first strategy we'll discuss today is real estate investment. Now let's talk about why this is such a powerful way to generate passive income. Real estate investment has been a long-time favorite for those seeking to build wealth. It's a tangible asset that can provide steady cash flow and appreciate in value over time. But how does it generate passive income? Well, think of it this way. When you invest in a property and rent it out, you become the landlord. You'll earn rental income from your tenants, which is a form of passive income. This is because you're earning money from your investment without having to do much work. The property is doing the work for you. For example, let's say you've bought a small apartment complex. After covering your expenses, including any mortgage payments, property taxes, and maintenance costs, the rest of the rent you collect is profit. And the beauty of this is that you're making money every month, even as you sleep. Another way real estate investment can generate passive income is through property appreciation. This is where the value of your property increases over time. While this isn't a guaranteed outcome, historically, property values have generally risen. So, if you've bought a property in a growing area and held onto it for a few years, you could sell it for more than you purchased it for, making a tidy profit. But remember, like any investment strategy, real estate isn't without its risks. It requires upfront capital, ongoing management, and a keen understanding of the market. It's not a get-rich-quick scheme, but a strategic move that, with the right knowledge and research, can pay off handsomely. So if you're someone who enjoys the idea of owning physical assets and you're prepared to do your homework, real estate investment might just be the perfect strategy for you. With the right knowledge and research, real estate can become a lucrative passive income stream. Our second strategy is stock market investment. Now this is an exciting one. The stock market is a vibrant, dynamic world of opportunity and risk, where fortunes can be made and, yes, lost. So what is stock market investment? Simply put, it's buying a tiny piece of a company, a share, and as the company grows, so does the value of your share. Many companies also pay dividends, a little thank you to their shareholders, which can be a steady stream of income over time. Let's take an example. Imagine you bought 100 shares in a small tech startup 20 years ago. That startup is now a global powerhouse, and your initial investment could be worth a small fortune today. That's the power of long-term growth. However, it's not all sunshine and rainbows. The stock market is volatile, meaning it can go up and down, often unpredictably. This is where the risk comes in. You could buy shares in a company that, unfortunately, goes under, and you lose your investment. This is why research is crucial. Know the company you're investing in, understand its business model, its competition, and its growth potential. Investing is not gambling, it's calculated risk-taking. Diversification is another key strategy. Don't put all your eggs in one basket, as the saying goes. Spread your investments across different companies, industries, even countries. This way, if one investment goes south, others can balance it out. Now, the stock market might seem daunting, but there are resources available to help you navigate it. There are online platforms, books, and financial advisors ready to guide you on your investment journey. Remember, investing in the stock market requires patience and discipline, but the rewards can be substantial. It's not a get-rich-quick scheme, but a strategic, long-term approach to wealth creation. You're not just earning money, you're making your money work for you. So are you ready to dive into the world of stock market investment? It's a journey filled with opportunities, learning, and potential growth. Remember, investing in the stock market requires patience and discipline, but the rewards can be substantial. The third strategy on our list is peer-to-peer lending, also known as P2P lending. Now you might be wondering, what is P2P lending? Well, it's a relatively new financial innovation that has been gaining popularity over the years. It's a method of debt financing that enables individuals to borrow and lend money without the use of an official financial institution as an intermediary. So how does it work? Think of it as a digital marketplace where borrowers and lenders come together. As an investor, you can choose to fund specific loans or parts of loans. This is where it gets interesting. When the borrower repays the loan, you receive a portion of the repayment, which includes the principal and interest. This is how you generate passive income through P2P lending. The beauty of P2P lending is that it offers a higher potential return compared to traditional savings and investment options. However, with higher returns come higher risks. The primary risk being the borrower defaulting on the loan. But don't let this scare you away. Most P2P platforms have measures in place to mitigate this risk, such as credit checks and risk assessments. Furthermore, it's crucial to diversify your investments. Instead of putting all your eggs in one basket, spread your investments across multiple loans. This way, if one borrower defaults, you still have other loans generating income. Now, let's talk about potential returns. While returns can vary depending on various factors, it's not uncommon to see annual returns in the range of 5 to 10%. This is quite attractive, especially when you consider that it's a form of passive income. But remember, P2P lending is not a get-rich-quick scheme. It requires patience and careful planning. And like any other investment, it's crucial to do your homework. Research different P2P platforms, understand their terms and conditions, and assess the risks before you dive in. Peer-to-peer lending can be a great way to earn passive income, but like any investment, it's essential to do your due diligence. Our final strategy is creating a blog or YouTube channel. In the era of digital revolution, creating content has become a lucrative venture. Think of it as a garden. You plant the seeds today, and with regular care and nurturing, it can blossom into a lush green sanctuary. The same principle applies to creating a blog or a YouTube channel. Your content is the seed, and your audience is the soil. Now, how does this content garden generate money? Let's dive into that. When your blog or YouTube channel gains traction, it attracts advertisers. These advertisers pay to display their products or services on your platform. This is what we call advertising revenue, a primary income source for many content creators. But wait, there's more. Your blog or YouTube channel can also serve as a platform for affiliate marketing. In simple terms, you promote someone else's product or service, and when a sale is made through your referral, you get a commission. It's like being a digital salesperson, but with the flexibility of working from anywhere, anytime. And let's not forget, your channel or blog can open doors to other income opportunities. Sponsored posts, paid collaborations, merchandise sales, the possibilities are endless. But remember, like any garden, your content needs time to grow and flourish. It requires consistent effort, creativity, and a little bit of patience. Creating content requires time and effort, but with consistency, it can become a rewarding passive income stream. And there you have it, the top strategies for building passive income streams. We've explored the potential of real estate investment, the opportunities in the stock market, the benefits of peer-to-peer lending, and the power of creating your own blog or YouTube channel. Each of these strategies has its own strengths, and they all offer unique ways to build a steady stream of income that can help you achieve your financial goals. But remember, building wealth is a marathon, not a sprint. It takes time, patience, and strategic planning. There's no one-size-fits-all solution, so it's crucial to choose the strategy that aligns with your financial goals, risk tolerance, and personal interests. The journey towards financial freedom can be challenging, but the reward is well worth the effort. And remember, you don't have to go it alone. Remember, building passive income streams is a journey, not a sprint. Subscribe to the House Lux Estate channel for more wealth-building tips and strategies. Thanks for watching, and here's to your financial freedom.